Hello and welcome to another update video about AGIX. On the AGIX chart, I've now added the 88.7 fib level just to give you an idea of an additional level in case we break below the 19.3 cent level. Anyway, as you know, a break below the 19.3 cent level, which is the 78.6 fib level, would certainly not add to the reliability here of the chart. It would certainly be bad for the chart, and potentially bearish. We're currently tracking here a potential 5-wave move to the upside of the June lows. That is, and I have to always remind everybody again, because I need to understand my reasoning behind tracking 5 waves here, and a support area. The 5 waves up, they are not high quality 5 waves. They are at best a diagonal structure. So while you can count 5 waves, it is corrective. So with any diagonal pattern, it needs to prove itself. Basically, what does it need to prove itself? It needs to prove that a lasting low has been made. And it can really only do that as per the Elliott wave rules and guidelines by showing us 5 waves. But if the 5 waves are not an impulse and they are only a diagonal, then we need to be cautious still, because a diagonal means that no side is clearly winning. It also indicates that we could be, yes, in the very early stages of a new uptrend after this quite substantial correction, here. But it would be the early stages, and therefore we just need to be cautious and shouldn't ape in or do some crazy stuff. I mean, all we're doing at the moment, we have the 5 waves. That means we can work with something, and we can work with the fib levels for a wave 2 pullback. Normally, I don't want it to break below the 78.6 fib level, and you can see how powerful that fib level is, because if I go to the 4-hour chart, it might take a while, slow today, you can see that it reacted perfectly to that level, and it's just loading, to that level here of the larger wave degree, and the larger time frame, the 78.6 fib level here at 17.3 cents, it reacted to it perfectly on the 10th of June. So these levels are important, especially the 78.6 fib level, and it's just being drawn to that level again. And that level is at 19.3 cents. I want to avoid a break below that level. If it breaks, then it indicates that this potential we're tracking is not going to work out. And don't misunderstand this analysis. I'm not telling you it will turn around there. What I'm doing is we're tracking, because of the 5 waves, we can give it a chance. We're tracking a bullish support area. But if we don't see a reaction at 19.3 cents, I would consider this highly unreliable. It's already unreliable because it is only a diagonal structure, the move up. And so far, I haven't called a bottom in place here, okay? For good reason, because so far it hasn't given us any indication or confirmation that a low is in place, and is coming down quite rapidly. So next support is 19.3 cents. Below that level, I would prefer a continuation of the bearish count. It could still find a turnaround then at 18.34 cents, but even if it sees a reaction there, oftentimes they will fail in the end. Good example was not so long ago, Chili's. Okay, that's my update about AGIX. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.